Hello friends, now we are moving on to subdivision of a shares. It is a pre-written note because I have recorded the video in a normal manner previously, but it has not got recorded. Some memory issue, so I have to re-record it. It is very irritating when such thing happens to me. It is fourth or fifth time I am facing this problem. So let's start subdivision of shares. Subdivision of share is generally vice versa of consolidation of shares. Subdivision of shares means conversion of shares of larger denomination into the shares of smaller denomination. The journal entry for this is equity share capital account debit, then credit will be equity share capital account. Here in the debit you have to write the existing number of the equity share into the existing face value. In the new you have to write new number of equity share into new face value. Okay, so let's take an example. ABC Limited, having 10,000 equity shares of rupees 100 each, decided to subdivide the shares into the shares of rupees 10 each. In the exam the question will be asked in this manner only. If the question says converted or reduced, for that we have a different method of solving, so that I'll be teaching you in the future video, so please don't worry about that. First understand subdivision of shares. Okay. Equity share capital. For this question the solution will be the journal entry. Firstly you write the journal entry, equity share capital account debit to equity share capital account. Now the value will be 10 lakhs only. Okay, but the number of shares will change and the face value will change. That you have to show in this brackets. Okay, in the existing we have existing 10,000 number of equity shares and the face value is 10, so we'll write 10,000 into 100 and we'll get 10 lakhs. But the new face value is 10, so in the face value place write 10 divided by, and then later you do this, you will get the number of shares. How will you get the number of shares of the new? It will be like this: 10 lakhs divided by 10, which comes to rupees 1 lakh. I hope this is visible. So 1 lakh into 10 lakhs. The amount of the equity shares is not changed, only the number of equity shares have changed. I hope this is quite clear. In subdivision the number of shares increases and the face value decreases. Okay, so please pause the video and copy this much. I have literally completed the theory of this chapter, and later on I came to recognize that the videos have not been recorded. Such a pain. I hope you all have copied this much. Fourth, conversion of shares into stock. This part is not relevant for your IPCC level, but still I have thought it should be taught to you all. A company may convert its shares into stocks of any denomination or can convert its stocks into share of any denomination. So firstly you all might be thinking, what is the difference between share and stock? The difference between share is shares are generally in round denomination. Denomination does not mean rupees. Denomination means the number, like 10,000 number of equity shares or 5,000 number of equity shares. Okay, 1 equity shares, 2 equity shares or 3 equity shares, that is round denomination. And stocks means stock may be in fraction, like 1.5 number of shares, 2.5 number of shares, 10,000.5 number of shares. So this is the only difference. The journal entry for conversion of the share into stock is equity share capital account debit to equity share stock account credit. Okay, I hope this is quite simple. Please pause the video and copy this much. I hope you all have paused the video and copied this much. The last part is cancellation of unissued shares. What does this mean? A company may cancel shares which have not been taken up by any person and reduce the amount of the share so cancelled. Okay, what does this mean? Many times the company have issued the few number of shares, but the general public have not subscribed to it. So for that purpose they have to cancel the share. For that purpose there is no journal entry. So this is just an information. Please copy this much. I know I have not given time to copy. Please copy this both. Please pause the video and copy this both. I hope you all have copied this much. Now we are going into the core of the chapter. Firstly, we'll see the steps. Step 1. In what is the step 1? Step 1 is in the question. The question will provide us with the balance sheet of overvalued asset and unpaid, that is overdue liabilities in the question. Okay. From that question we have to, that balance sheet is of no importance, just you have to see the values and you have to make new balance sheet. Okay. The question will start in that manner. Balance sheet will be provided and after balance sheet adjustment will be given. So step 2, adjustment will be provided. In the adjustment, direction will be given to bring the true value of the assets and the liability. That means in the old balance sheet, that is the question's balance sheet, the asset is given at rupees say 10 lakhs. Okay, and in the adjustment it is said that the fair value of that asset today is say 8 lakhs. So that means the value of the asset have been reduced to 8 lakhs. So in our new balance sheet, the value of the asset will be 8 lakhs rather 10 lakhs. Okay. And that 2 lakhs difference, where it will be going, I'll be telling you, because after explaining you this, we are going to there only. Okay. So adjustment will give us the direction, what to do and what not to do. Step 3 is the solution that you have to do. Prepare capital reduction account, that is ledger. Capital reduction account is a ledger. Always draw capital reduction account in the paper because it is a good habit. Okay, if you do that, it will help you in this manner. You can see the ledger and pass the journal entries, and capital reduction account has to be drawn because at the end the capital reduction account will have a balancing figure on the debit side. So that is capital reserve. That capital reserve you have to show in your balance sheet. So if you are not drawing this capital reduction account, you will not be getting capital reserve. So your balance sheet won't be getting tally and neither your journal entries will be getting completed. So always have an habit of drawing capital reduction account in fair. Okay. Second, seeing ledger past journal entries, quite simple. See, I've written here also, keep an habit of preparing capital reduction account in fair, not in a rough manner but in fair. Okay. From capital reduction, you will get capital reserve on the debit side or goodwill on the credit side. See, if it is a worst scenario, that's why I've underlined twice over here. Goodwill on the credit side of the capital reduction is a worst scenario if the question is not framed properly. Okay. Getting goodwill on the credit side is not possible in the capital reduction account. Only it is possible if the question is not framed properly. On the debit side only you will be getting capital reserve, that is the balancing figure of this account, capital reduction account. And lastly, preparation of the balance sheet as per revised schedule 3. Okay, you have to prepare the balance sheet of the revised schedule 3. I am providing you all with the pro forma of capital reduction as well as the balance sheet. So firstly, I want you all to please pause the video and copy this much. I hope you all have copied this much.